What are you seeing in terms of advisors that are adapting alternative investments?
Yeah, so I think as you would know, full well, kind of reading in the press and otherwise, right? Adoption trends and the acceleration of demand is up fairly universally. I talked about our clientele, kind of call it the bell curve of these firms, or these 2 to 10 or 10, even kind of $2 to $20 billion plus advisory firms. These firms 5 years ago were half that size, and some of that is just a function of the way that markets have grown. And so there are a lot more clients now just by virtue of the wealth effects at really all advisory firms of almost any size that are fitting a profile and have a liquidity parameter to do more in alternatives. And so I think some of what you read in the press is fair about advisors, that trend of starting with things that are more in the evergreen private credit or private real estate income oriented type of solutions, right? That all holds very true. But actually, what we've experienced and kind of been a unique position, I think, because again, we are open architecture, right? We permit advisors to really bring whatever they want to the platform. Is that advisors are still primarily utilizing private markets as a means of return enhancement for their end clients, and so that means allocations over-index to private equity, they over-index to secondaries. Venture, single asset deals have increasingly become popular on the platform. And again, partially because we can facilitate access to these at such a low syndication threshold, but also I think just in the spirit that these are advisors who now have built diversified private equity programs through secondaries, through buyout, through growth equity, and are saying, hey, I'm now pursuing kind of the satellite opportunities or the primary co-investment opportunities that are coming out of the great relationships I have. And we're seeing an acceleration, of that trend across the advisors that we work with, certainly. But again, it's everything is kind of up and to the right. I think the private credit story is certainly there, but really, big allocations still to private equity, and again, a continued demand to branch out and do more of this own source, single asset or single opportunity type deals is coming more to the fore.